In today's video, John and team answer a pro member question. How do you best monitor your control points? Are these points automated or manually monitored? Listen up. For those serious about becoming successful, consistently profitable options traders, now is the time to build skills in technical analysis, market analysis, and applied volatility to get those results. We have multiple memberships, starting with our Go membership that teaches rules-based trading and our Pro membership that teaches more subjective trading. For more information, go to lockeinyoursuccess.com/memberships.
When setting control points where you exit, adjust at a certain price, how are you checking for those? Are you monitoring throughout the day, setting an automated trade with your broker, or are you simply checking at your daily checkpoint time? So good question. The way I do it is I've got it marked on the chart, and I'll show you an example of it. I just want to speak to the timing of checking in on it first. I'll set alerts, which I think is just good trader hygiene in case you're away from the desk. And I'm also going to monitor, now whether I'm going to wait to the end of the day or not, I'm going to monitor the intensity of a move. Let's say that one of the control points is in play, it's being threatened, so to speak. I'm going to monitor the intensity of the move. We're just kind of grinding down towards it. I'm going to wait to the end of the day. That's generally that is a hard and fast rule for me, to wait to the end of the day. The only exception to that rule would be the intensity. Like if we break a crucial support and the market just comes crashing through, then I will make an intraday adjustment or try to mitigate risk. Otherwise, I'm gonna wait till the end of the day. My trades are done manually. You can automate them, but like if I'm trying to just roll down some, do it like a two-step. Let's say the market's breaking down under my control point. I know I'm going to want to adjust, and I'm going to do some kind of a Texas two-step, which is roll, say, half my shorts down 20 points and my upper longs down 10. I'm not going to automate that because it may not get filled. And if the market's moving fast, I want to make sure that that gets filled. So I'm going to do that manually and try to avoid that. If you're going to protect a position, then I might automate that. 9 times out of 10, I'm not going to automate that execution because I want to make sure, first of all, I want to see if I can get fair price executed. Number 2, I want to make sure it gets executed. I don't know if you had any thoughts on that first before I move into how I mark my charts, John.
Yes, I actually do have a comment on that. And I think this comes back to our objectives. What is the purpose for the control point, and what time frame is the control point? So I guess as a blanket statement, I would say I would adjust or pay attention to a control point when the bar in the time frame that I'm using is imminent that it's going to close beyond my control point, if that makes sense. Mm-hmm. So if I'm doing a 60-day trade, I'm on a daily chart, and I have a control point at 1,000, and the market goes intraday to 1,010, I really don't care. If it looks like if I'm at 4:45, quarter of 4, or half an hour before close, and it looks pretty imminent, it's gonna close beyond my control point, I'll make my adjustments. Other than that, I'm not gonna touch it midday or anything like that. If I'm in a 10-day trade and I want to make intraday adjustments and I'm focused on the 90-day chart, then I'm going to wait for a close on my 90-day chart that's imminent. Or if I'm looking at a 5-minute chart, if that's my choice, I'll do it. I'll take action on that control point when my 5-minute bar closes. And of course, if I'm using a 5-minute chart, there's a decent chance that might reverse during the day, and I may end up at the end of the day reversed out of that trade. But that's kind of how I pay attention to control points. It all depends on the time frame I'm trading and the time frame or the purpose for the control point.
Okay, let me just kind of show you folks how I mark my charts for control points, and let me know if you can see the SPX.
I can see the SPX.
Okay, so what I do is I know it's kind of messy, but just follow my drawing here. I want to first map out what I think a range is in the market, and that's denoted by this cyan. I guess that's the color. top level, bottom level, and it's kind of put a mark in it. And I'll move this in the chart as the markets move around, right? So I kind of always want to know, because markets go from balance to trend, balance to trend. And then obviously it can go the other way as well. And I just kind of want to mark, where do I feel like the market's in balance? Now, that's not necessarily in relation to the trade I have on. This is just telling me, the market's likely to stay in this fairly wide range. And that's what this tells me here. Now, as far as my trade, I have on, then I'll have control points, and I have 2 of them usually, where I might need to adjust here, and at that level, at this level, if it doesn't bounce, then I need to either exit the trade or reconfigure my strategy. And then to the upside, obviously, if that gets breached, then I have certain actions. But right now, the risk, or the more likely, is a breakdown from here that I want to be more concerned about. So that's kind of how I mark my charts as it relates to setting the range. 2 things: setting the kind of range that I see the market kind of staying in, 1, and then number 2, where control points in terms of where I need to make adjustments with my trades.
I really like that. And
Cool.
One of the things that I was just wanted to point out is, I would have the same sentiment about where the market's going to range, and notice how I traded it in the examples we just did.
Yeah.
Right, bearish at the bottom, bullish at the bottom, bearish at the top, and then if we break the control point, then we're likely to set a new range. So you're going to reconfigure to deal with the likely new range, right?
Yeah, exactly.
Yeah. So
and so that it's kind of like, as long as my trade can handle.
And this is a technical control point, right? Not a positional control point, because you might have positional control points within that.
Right. It depends on what I have going on. But this is kind of like, for most of my positions, if the market's staying in this area, I'm doing nothing. Not too worried about, it keeps you from over adjusting. It's kind of like take no action, depending on what trade you have on a strategy, but generally what I have on is going to be fine in this range. But
right. So let's talk. Can I just bring something up, because there's something going into my brain here. So within this technical control area, right, or this control area, if you have control points that you have on your trade because you're taking on too much risk. Say I have a downside problem on my trade, and I'm still well above my technical control point. My down adjustments should be focused on reducing risk.
Yeah,
especially if I get near the bottom of this. So say I get near the bottom of this, and I'm triggering positional control points. I want to adjust my trade: less risk to the downside, more positive delta. Less risk to the downside, more positive delta, to get ready for the pop. And if I'm wrong, then I take that less risk to the downside, right? Yeah. And then the opposite on the top. And then if I'm in the middle, I'm just I just have to trade the trade by the guidelines and just wait it out, basically.
That's it.
Right.
That's it. Yeah. That's a great point. I think in some sense it simplifies the technical analysis during the week. What I mean by that is, Sundays is prep day for me, looking at the charts, start top down, right? The monthly, the weekly, and then drill down in the daily, maybe in probably the hourly, and develop this, for each market that I'm in, and set my control points. But then during the week, is, for me, and this goes back to the self-awareness that you have to develop. I know I'm going to be vulnerable to talking myself out of stuff or into stuff that I'll look back on and say, did I take crazy pills? Right? So, so this anchors me that when I was in a calm state of mind, very relaxed and looking as objectively as possible on a Sunday, right? Who's not relaxed on a Sunday? That this keeps me from making stupid decisions and talking myself like, oh, maybe, this white dotted line is the 20 moving average. I'm just making one up. Say we close below that. Oh, we're going to, it's crash time. no, I've got the control point here. It's just probably meaning we're going to come here. So doing this this is almost like a process thing, helps me from overthinking during the week, which is when your emotions can flare up, whether it's during the market or outside the market. I mean, it's generally during the market, right? It's a scenario is it's towards the it's my check time on Tuesday. The market's had an aggressive move down. Let's say it moved down to here. And I didn't have this sort of framework in place. I might overadjust the trade. When in reality, what I should have done is what John kind of mentioned is I'll mitigate some of the down risk, but play the positive delta for the bounce as would be expected, because this is a former breakout area, right? So we usually test former breakout areas and take off to some degree, or maybe we hit the bottom and just stay in this range. Either way, I want some positive delta. But this just really keeps me grounded. This sort of range demarcation, and then the checkpoints. I mean the control points. So that's something that I have to keep. I'm aware that I could talk myself into silly stuff, and so this is a way to mitigate that.
Yeah. The other thing too is if you need a tighter range, you can go to shorter term charts and use different types of control points too. But you always want to keep the longer term ones in context because they're stronger.
Yeah. And then let me click through if you want. I can kind of show you what I have in the other markets for that. So here's the Russell, right? So upside. I don't necessarily have a control point. I mean, we've got targets up here. I've got 3 price pattern targets. So this is kind of self-evident to me. If we break this, we're probably gonna take those out. But but we got lots of overhead stuff, so not really worried. In other words, the comment is there's a lot of overhead supply. Probably isn't going to go too far. Gonna have to monitor it. So again, that's why I don't have a whole bunch of markings up here. I'm more focused on what's going to happen if the market continues to back off. And I have this, I don't know what these are, triangles, wedges, doesn't matter what they are. Which call we broke out of one, we went back in it, we broke out of it. Now we're back down. Maybe we bounce here, and if that fails, then I'm going to expect a little bit more of a down move. Maybe it comes down into here. So this is a very different look, right? I mean, it's like you look at SPX, what it's doing in terms of its price action, its higher highs, higher lows, and so on forth. It's very different with Russell. So you want to be aware of that. And so that's how that kind of looks. And then the NDX is compared to those two, especially SPX is different too. I have, and everybody's going to be different. I have SPX or NDX barely hanging on to what I have called, I don't even know what this name, I guess this is my range for the week. It's barely hanging on. So it's a lot weaker relative to that for me.
Right.
And if we break down, for me, that's the control point. So I'm at the control point, whereas the other two markets aren't. And if we do break it down, I see us coming down in the 17 or 16.
Yeah,
970.
Decent chance it drags the rest of the market with it. So,
right.
Yeah.
Right. So that's another aspect of this exercise, is to say, well, what does this range? How do they look relative to each other? NDX is at the bottom of it. It's trying to hold on. Is it going to bounce from here or give up the ghost? Russell's kind of in the bottom third, kind of to the midpoint of its range, and the SPX similar. So they're all kind of different, but I want to be aware of how they are positioned relative to the range I have marked.
Yeah, and you know what? You don't have to be right on the range.
No, I mean,
you'll get better at it. And the market doesn't always hold to solid ranges, and sometimes you have to flip your decision. You flip a control point, you flip the other direction, and then it flips back. But you're just using, the important part is you have decision points, and they're reasonable decision points. They're not going to be exact decision points. In other words, you're not always going to be exactly right with them either.
Yeah, you could get a look below and fail, snap or crack, like it goes below your control point, closes the day below, and then snaps back, it goes the other way. So it just kind of part of trading. But hopefully that gives people an idea how to set control points in a range to keep that monkey mind from overworking during the week and dreaming up all sorts of scenarios. And then you look back on, early on, you'd look back at the charts on Sunday, what I thought was going to happen. And then you're like, wow, the market really didn't move anywhere. And I was acting like nuclear bombs were going off. It's going to break out. It's going to fall apart. No, it didn't do anything. And if I didn't adjust my trade at all, I would have made 5 times more money. So,
right. Yeah, exactly. There's something too, especially when you're in a choppy market, there's something to not adjusting your trades. There's definitely something to be said about that.
You really open yourself up to lots of good opportunity and that's the phrase you always use, if you do it responsibly.
Mm-hmm.
I like that 2-step maneuver that takes out downside risk, but still gives you upside opportunity. So it's a nice trade-off. I've mitigated downside risk in case I'm wrong, but I still have a chance to make some decent money.
Right.
If it bounces.